Get ready, folks, because the news cycle is absolutely exploding, and you're in the right place to catch every single seismic shift. We're diving headfirst into a whirlwind of updates that are rewriting the playbook across the board. From massive market moves and groundbreaking tech integrations to strategic alliances that are shaking up entire industries, this is the information you cannot afford to miss. We've got a packed show that's going to keep you on the edge of your seat, so buckle up and let's get into it. First up, prepare for a financial spectacle as a major merger is set to create a new powerhouse, backed by some seriously influential names, and its stock is already on an unprecedented tier. We'll break down exactly what this means for the market and who stands to benefit most from this monumental deal. Then, we're shifting gears to look at how one of the biggest names in tech is throwing their weight behind a fundamental shift in how we use digital currency, pushing it beyond just an investment and into our everyday lives. This could fundamentally change how we transact. We'll explore the technology and the vision behind this move. After that, we're heading into the cutting edge of innovation, where a company is merging artificial intelligence with the very core of digital asset creation, creating a dual revenue stream that's defying market volatility and setting new standards for efficiency and profitability. You'll want to know how they're doing it. And finally, we're looking at a paradigm shift in how major players are approaching digital assets, moving towards decentralized control and strategic holdings that could redefine institutional investment. This is big picture stuff, folks. It's all happening right now, and Bitcoin Bulletin is your exclusive front row seat. Don't go anywhere. Your essential updates start now. Make sure you smash that like button, subscribe for more, and hit that notification bell so you never miss a beat. Trump-backed crypto merge powers Gryphon's record surge. This deal is creating massive market buzz. Gryphon Digital Mining stock has seen an astonishing surge, climbing an incredible 231% since May. This explosive growth is directly tied to the impending completion of its $5 billion merger with American Bitcoin, a venture notably backed by the Trump family. Once finalized, this all-stock deal will birth a new public entity, set to trade under the ticker ABTC, with trading expected to commence in early September. This strategic union is poised to reshape the cryptocurrency mining landscape, positioning the combined company as a formidable force in the industry. The new entity, which will retain the name American Bitcoin, is set to be under the significant control of key figures: Eric Trump and Donald Trump Jr., sons of former President Donald Trump, will be instrumental in its leadership, alongside Hut 8, a major cryptocurrency mining firm that holds an impressive 80% stake in American Bitcoin. This concentration of ownership, with 98% of the new firm controlled by these parties and other anchor investors like the Winklevoss twins, signals a powerful alignment of interests and a strategic consolidation of influence within the digital asset space. This merger doesn't just represent a significant corporate move. It's also deeply intertwined with the evolving regulatory environment in the United States. President Trump's executive order in March 2025, establishing a national strategic Bitcoin reserve, and the recent passage of the Genius Act in July, which aims to regulate stablecoins, are creating a more defined pathway for crypto firms to engage with public markets. This confluence of regulatory shifts and private sector ambition suggests a growing institutional embrace of digital assets and the infrastructure that supports them. Despite some past financial headwinds for Gryphon, including fluctuations in operating cash flow and profitability metrics, the market is viewing this merger as a potent turnaround opportunity. The company's substantial $5 billion mixed securities filing demonstrates a clear commitment to an aggressive growth strategy, aimed at expanding its Bitcoin mining operations. Furthermore, the partnership with Hut 8's subsidiary is expected to leverage shared expertise and resources, bolstering Gryphon's competitive edge in the fast-paced crypto sector. Analysts are closely watching how the combined entity will navigate its future. While the merger offers a strategic advantage and access to capital, the long-term success will undoubtedly hinge on the company's ability to address its existing operational weaknesses and manage the inevitable regulatory scrutiny that often accompanies high-profile ventures involving prominent political families. The involvement of the Trump family in the crypto sector, through American Bitcoin and other financial ventures, continues to attract attention, highlighting both the growing mainstream acceptance of digital assets and the ongoing debate surrounding transparency and oversight in this rapidly developing industry. This strategic consolidation is already making waves, but the conversation around digital currency is far from over. Next, we'll explore how a tech titan is championing Bitcoin's role in our everyday transactions. Bitcoin's payment potential gains strategic support from Block's Dorsey. This is a major endorsement for digital currency's practical use. Jack Dorsey, the visionary founder behind Block, formerly Square, is doubling down on his long-held belief that Bitcoin should be more than just a speculative investment. He champions it as a vital medium of exchange for everyday commerce. Dorsey's persistent advocacy aligns perfectly with Block's overarching mission to seamlessly integrate digital payment solutions into the fabric of traditional finance. Through innovative platforms and user-friendly tools, Block is actively working to dismantle the barriers to Bitcoin adoption, making it easier for both consumers and businesses to engage with the cryptocurrency. Block's commitment to this vision is evident in its integration of Bitcoin payment capabilities across its popular services, including Square and Afterpay. By empowering merchants to accept Bitcoin, Block is carving out a significant niche in the burgeoning fintech landscape. Their strategy focuses on minimizing the complexities often associated with cryptocurrency transactions, offering merchants straightforward interfaces and comprehensive support systems. This approach is resonating with an increasing number of businesses eager to explore the advantages of digital currencies, such as streamlining operations and expanding their customer reach. However, the path to widespread Bitcoin payment adoption is not without its hurdles. Recent market analyses highlight Bitcoin's inherent price volatility as a persistent concern for both potential users and businesses. Research from firms like K33 suggests that Bitcoin's price could face continued downward pressure, partly due to a buildup of leverage in the market and a significant capital rotation towards Ethereum. This dynamic introduces liquidity risks for those holding long positions in Bitcoin, potentially leading to further market instability. Despite these challenges, proponents of Bitcoin's commercial utility emphasize its unique strengths as a decentralized, borderless currency, particularly beneficial for international transactions where conventional payment systems can be slow and costly. In parallel, the broader ecosystem is seeing advancements that could bolster digital currency infrastructure. Google Cloud, for instance, is developing a blockchain platform named Universal Ledger, GCUL. Designed as a permissioned Layer 1 network with a focus on compliance, GCUL aims to support programmable payments and asset management for financial institutions. While still in its early testing phases, this initiative underscores the growing interest from major technology players in leveraging blockchain for financial services, potentially creating complementary systems that expand the use cases for digital currencies. Adding to this momentum, MoonPay, a prominent cryptocurrency payment gateway, has partnered with Bitcoin.com to introduce a new feature called Balance. This integration allows users to hold fiat currency balances directly within the Bitcoin.com app, thereby enabling faster and more cost-effective cryptocurrency transactions. By providing this direct link between fiat and crypto, users can fund, store, and spend their balances to acquire digital assets without incurring additional transaction fees. This move is part of a concerted effort to enhance the overall user experience in the crypto space, making digital currency transactions more accessible and intuitive, especially for newcomers. The growing interest in Bitcoin as a payment method extends beyond the tech sector, with some restaurants and small retailers beginning to consider its acceptance. While current adoption rates remain low, with a study indicating only 1% of Americans use digital currencies for retail transactions in 2023, the landscape is shifting. Crypto ownership in the U.S. has seen a significant rise, with over 28% of adults now holding cryptocurrencies. This increasing familiarity suggests that, even if Bitcoin isn't yet a dominant payment tool, its role in commerce is evolving. and its use in everyday transactions could see substantial growth as both businesses and consumers become more comfortable with the underlying technology. Dorsey's push for utility is a game changer, but the innovation in the digital asset space doesn't stop there. Get ready to see how artificial intelligence is revolutionizing the mining industry next. How is IREN changing Bitcoin mining? This company is redefining efficiency through AI integration. IREN is making significant waves in the Bitcoin mining industry by strategically embedding artificial intelligence, AI, into its core operations. This sophisticated approach allows IREN to not only refine its mining methodologies, but also gain greater control over energy consumption and dramatically boost overall operational productivity. By leveraging advanced machine learning algorithms, IREN is equipped to predict shifts in network difficulty and dynamically adjust its mining configurations. This level of strategic flexibility is crucial for maximizing profitability while diligently managing costs, positioning IREN as a forward-thinking leader in the highly competitive cryptocurrency mining sector. Further solidifying its innovative stance, IREN has established a key partnership with NVIDIA, being recognized as a preferred partner. This alliance grants IREN privileged access to cutting-edge GPU technology, which is absolutely essential for expanding its AI capabilities and enhancing its computational power. This collaboration enables IREN to effectively manage its primary Bitcoin mining operations while simultaneously building out a robust AI cloud services division. This dual revenue model is a masterstroke, significantly mitigating the inherent risks associated with Bitcoin price volatility and creating a more stable financial foundation for the company. Financially, IREN's integration of AI has yielded remarkable results. The company reported an impressive $501 million in revenue for the fiscal year, marking a substantial 168% increase compared to the previous year. This growth is a testament to the combined strength of its Bitcoin mining endeavors and its rapidly expanding AI cloud services sector. In the most recent financial quarter, IREN generated $187.3 million in revenue, showcasing a significant year-on-year increase of 226%. The pivotal role of AI in this financial success cannot be overstated. By boosting mining efficiency and driving down operational costs, IREN achieved a net income of $176.9 million. The company's strategic diversification of revenue streams further bolsters its profitability, with projections indicating that AI services alone are expected to contribute between $200 million and $250 million annually by the end of 2025. What truly sets IREN apart from traditional mining companies is its pioneering dual revenue model. Unlike conventional miners, who are often solely reliant on the fluctuating rewards from cryptocurrency extraction, IREN's diversified approach allows it to excel in both the mining and AI services sectors. While many mining firms grapple with escalating energy costs and intensifying competition, IREN's strategy provides a buffer against these challenges. For instance, where traditional miners might face significant difficulties during Bitcoin price downturns, IREN's AI services offer a consistent and high-margin revenue stream. This model not only reduces risk exposure, but also positions IREN to capitalize on the burgeoning demand for AI infrastructure, which is projected to grow at a compound annual growth rate of 25% through 2030. Renewable energy is a cornerstone of IREN's operational strategy, contributing significantly to its industry-leading low costs and eco-friendly practices. The company boasts an exceptional energy efficiency rating of 15 JTH and sources an impressive 97% of its energy from renewable sources like hydro, wind, and solar power. This unwavering commitment to sustainability not only slashes energy expenses, but also aligns perfectly with crucial environmental, social, and governance (ESG) objectives, making it highly attractive to institutional investors. By prioritizing renewable energy, IREN effectively insulates itself from the impact of rising energy costs, a major concern for many in the mining industry, thereby enhancing its competitive positioning and setting a new benchmark for sustainability in cryptocurrency mining. IREN's innovative approach is setting new industry standards, but the evolution of digital assets is also changing how institutions invest. Prepare for a look at the new paradigm of decentralized governance and Bitcoin treasuries. Decentralized governance and the rise of Bitcoin treasuries, a new paradigm for institutional investors. Institutions are rethinking their digital asset strategies. The landscape for institutional investors engaging with digital assets is undergoing a profound transformation, marked by a growing emphasis on decentralized governance and the strategic accumulation of Bitcoin treasuries. This shift signifies a move away from traditional, centralized management models towards a more distributed and community-driven approach. As regulatory frameworks mature and the underlying technology becomes more robust, institutions are increasingly exploring ways to leverage decentralized autonomous organizations, DAOs, and similar governance structures to manage their digital asset portfolios. This allows for greater transparency, enhanced security, and more inclusive decision-making processes, aligning with the core ethos of blockchain technology. The concept of Bitcoin treasuries is gaining significant traction, reflecting a strategic decision by companies and investment funds to hold Bitcoin as a primary reserve asset. This is often driven by a belief in Bitcoin's long-term value appreciation, its potential as an inflation hedge, and its role as a decentralized store of value independent of traditional financial systems. Unlike corporate treasuries that might hold fiat currencies or easily liquidated short-term assets, Bitcoin treasuries are viewed as strategic, long-term holdings designed to preserve and grow capital in a rapidly evolving economic environment. This approach is not merely about speculative investment. It's about integrating Bitcoin into the fundamental financial architecture of organizations. This new paradigm is underpinned by advancements in decentralized finance, DeFi, and the increasing sophistication of blockchain-based governance tools. DAOs, for example, enable token holders to propose and vote on key decisions, ranging from protocol upgrades to treasury management. This distributed governance model fosters greater accountability and resilience, as decision-making power is spread across a wider network of stakeholders rather than concentrated in a few hands. For institutional investors, this offers a compelling alternative to the opaque and often rigid structures of traditional finance. They can participate in the governance of protocols and platforms, ensuring that their investments align with their strategic objectives and risk appetites. Furthermore, the rise of Bitcoin treasuries is being facilitated by improved infrastructure and services that cater specifically to institutional needs. This includes enhanced custody solutions, regulatory compliance tools, and more accessible trading platforms. As these services mature, they lower the barriers to entry for large-scale participation, making it feasible for even more institutions to allocate significant capital to Bitcoin. The trend is also influenced by macroeconomic factors, such as persistent inflation concerns and the search for uncorrelated assets, which make Bitcoin's unique properties increasingly attractive to sophisticated investors looking to diversify their portfolios and hedge against traditional market risks. The implications of this shift are far-reaching. It suggests a future where decentralized governance plays a crucial role in the management of significant financial assets, potentially leading to more equitable and efficient markets. As more institutions adopt this approach, it could catalyze further innovation in blockchain technology and financial services, creating new opportunities for growth and investment. The move towards decentralized treasuries and governance represents a fundamental rethinking of how value is stored, managed, and grown in the digital age, signaling a significant evolution in the way capital is deployed by major financial players. This institutional shift is reshaping the financial future, and that's a wrap on today's top stories. Stay tuned for a rapid-fire recap and your essential calls to action. All right, everyone, let's do a super-fast recap. Gryphon Digital Mining stock is soaring ahead of its Trump-backed merger. Jack Dorsey and Block are pushing Bitcoin as the go-to payment tool for everyday use. IREN is revolutionizing mining by merging AI with operations for massive growth, and institutions are embracing decentralized governance with Bitcoin Treasuries. What a show! If you found this information valuable, do yourself a favor and smash that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto news, and ring that notification bell so you're always the first to know. Don't forget to follow us on all our social channels for even more updates and join the conversation in the comments below.